Welcome to my channel SB Quotes. It's not always easy to do what's not popular, but that's where you make your money. Buy stocks that look bad to less careful investors and hang on until their real value is recognized. Patience is a virtue in investing. Sometimes, the best decision is to do nothing and wait for the right opportunities. Successful stocks don't tell you when to sell. When you feel like bragging, it's probably time to sell. Beating the market consistently requires discipline, research, and a contrarian mindset. I don't want a lot of good investments, I want a few outstanding ones. Stay true to your investment principles and don't be swayed by short-term market noise. The market is often driven by emotions and short-term fluctuations. Stay focused on the underlying value of the assets. I've never bought a stock unless, in my view, it was on sale. Avoid following the crowd blindly. Make your own informed decisions based on research and analysis. Successful investing requires a balance between risk and reward. Be cautious, but don't be afraid to take calculated risks. If a stock doesn't do anything, you buy more, or if you've already got too much, you don't buy any more, but you keep it, until either America warms up to it or the fundamentals change. We try to look out 6 to 18 months, and sometimes they're faster, but most of the time they're slower. Our average holding period is probably 3 years. Look for companies with a competitive advantage, strong cash flow, and sound management. It's not always about finding the hottest stocks, it's about finding undervalued companies with strong fundamentals. Investing is about buying businesses, not just stocks. Focus on the long-term potential of the companies you invest in. Play to your strengths. Know your good plays and your not so great ones. I, for instance, don't own many technology stocks because of my limited technology knowledge. Everything we own was bought to be sold. If our predictions come to pass, and the market embraces a stock and it goes up, we start selling. That's simplistic but essentially the way I operate. If you get a significant price move, you begin selling early and look for something else. One reason the fund's cash level stays at around 20% is that we are consuming our ideas as we sell stocks. Investing is about understanding the businesses you own and having conviction in your decisions. Inflection points occur in the market, and around them performance can suffer, but you have to stick to your guns. An awful lot of people keep a stock too long because it gives them warm fuzzies, particularly when a contrarian stance has been vindicated. If they sell it, they lose bragging rights. I don't read, much less follow, the valuations or predictions. I study the numbers. Investment success does not require glamour stocks or bull markets. One of our strategies was that our top 10 holdings were about 40% of the portfolio. Buy on the cannons and sell on the trumpets. We don't forget to sell into strength. A lot of people can't bear to sell when a stock's price is going up. They're convinced that they've made a mistake if they don't hold out for the last dollar. It would bother us if a company had a lot of debt, and we would characterize it as a penalty relative to the PE. We almost always have insisted on a good yield on cyclicals. It gives you some kind of bulwark in case you're wrong. Shortcuts usually grease the rails to disappointing outcomes. Thanks so much for your watching. God bless you.